The stock market has been increasing and increasing and increasing in the last weeks. But you need to be very, very, very careful in this market because there are situations that are extremely risky. Especially, it's probably time to escape from some sectors. These videos have become, I believe, incredibly valuable on multiple points. I would really encourage you to subscribe to the channel in case, especially you are invested in this market, because there are some very good opportunities to buy. There are some sectors where the smart money is really entering. There are some sectors where, on the other hand, you really need to be very, very scared if you are scared in this, if you are invested in these sectors. So I will publish this video in my Patreon. I will not publish a lot, but this file in the Patreon will be contained and might be very, very interesting for you because there are all the transactions, all the buys and all the sells with the relative amounts, with the relative percentage that insiders were buying. Let's not lose additional time and let's look. In general, I can say that June was a quite bullish month because, as you can see here, we had 184 stocks bought and 940 sold. So it's around 20%. 20%, as you can see, is the higher among the last month. It was still when the market had a drop in September, October, and November that we weren't at these levels. So the market looks almost attractive, which is a paradox, but we need to enter into the details and understand what is happening, what are the risks. So in June, we have to say that the biggest number of buys were finance, was medical, business service, computer and technology, consumer discretionary. But what we are looking right now, the analysis went a little bit deeper, is out of the number stocks that are in every sectors, how many were bought and how many were sold. So one thing, especially here, business services, computer and technologies, and construction, we can see how bigger is the percentage of stocks sold towards the stocks that were bought. So this is really critical, and the percentage buy to sell. This is crazily scaring. Construction, 0% of stocks were bought. This is extremely bearish. That you have 0. We never had a sector like construction where insiders didn't buy any single stock. But don't worry, I prepared the final page of recap for you. So we have this percentage buy to sell, which seems to be shining for conglomerate. This is a very small sector that contains only 50 stocks. The incredible thing is that there were 2 buys, 1 sell. So this number is increasing high. I put a recap here where I'm trying to sum up different charts so that you can really see in which sectors you need to be concentrated, you need to buy, and which sectors you really need to go away. So the first column is the buy to sell, which shows that the good sectors are conglomerate, basic material, and sectors you really need to be scared: business services, computer and technologies, construction, because we are having just sales in these sectors. So this is very, very, very key. The most bought sectors were biomedical and genetics, the banks, but I'm starting to give less importance to this chart because I see monthly that basically biomedical and genetics have almost always the first place. So that's not a chart I'm looking at too much. Okay, guys, this chart is really, really complex, but is extremely important, I believe, because what I'm doing here, I'm seeing the volumes that enter the market in all the sectors, and I'm comparing it to the total. So I'm looking at the sectors where most money is entering, and I'm comparing to the average of the last 9 months. So this is critical because if we can see, like in June is this, okay, this that I'm highlighting, 55% of the money entered in oil, which is incredible that just oil, one sector, had over the half of the money that entered in the market by insiders. And there was a big buy by Warren Buffett in Occidental Petroleum, we have to say. That is pushing a bit this number up. You see, there was a 435 million buy. I think, guys, that oil looks a very, very good sector because of this incredible opportunity. Insider wouldn't put their money so much if they wouldn't see a chance here. So this is for you to know. That is a very, very good opportunity. Then what we can say on the other hand, that versus the last 9 months, this is the column, and I will show you the recap chart. So crazy amount of buy. So oil and energy are getting bought by 184% compared to the last 9 months. So the volumes are a lot higher. And if we look, I did the same for selling. The sell, instead the buying being 55% of the total, our sales in oil and energy were just 3% and were 63% compared to the last 9 months. That means that were less than the average of the last 9 months, like almost 40% less. I made a kind of total indicator. So I believe, guys, that if you are going right now and buy energy stocks, that's absolutely a good buy. This is for sure. Another sector where the smart money is really, really bullish that you can go and buy is conglomerate, because you have a 200% buy to sell. You have 3 times bigger buys than sell in the last 3 months, and the sell are 30%, are very low. This is a sector where you really want to be buying. What I want to look, guys, the sectors where I put really sell. Construction. Why? Because, okay, we have 0 buys, this is clear. On the other hand, the selling have not been so high. But still, I wouldn't want to be in a sector where, there is not really a catalyst. There is really no one buying. So for me, that's a sell. Computer and technology is very interesting. I put run away. This is really the time you need to get out from your Google, from your Microsoft, from your Nvidia. Because look, the volumes of sales have been growing very high, 82% of the last 6 months. This is really, really a high number. And 38% of the total sale in the sectors are being done in computer and technologies, while only 11% of buys. Guys, if you haven't taken profits, do it, because the smart money is really saying we need to get out from here. But on the other hand, I need to say that the buys were a lot higher than the last months and no one was buying. And I look why, the reason why there was a massive buy on CRM. CRM or Salesforce, there was a 100 million buy. So I can tell you why, because the stocks of software were getting destroyed recently because they say that with the AI, softwares are getting decimated. So you see, the majority of buys, especially the big ones, are about software. Yeah, like number one, ServiceNow, CRM. So maybe these are places where insiders see value in software. So that's something you need to look. So apart software, you need to run away from technology, because it's a sector with the, even apart from being the ones that is being sold the most, is the one that is even having the higher percentages towards the last month. Same business services. Maybe, I mean, we don't have any buying pressure here. We just have 20% of the last 9 months. sales have been in line with the last month, but really low percentage buy to sell. So you really don't want to be in these sectors right now. Don't buy here, for sure. Other sectors don't look that bad, like, you know, auto tires and trucks look good. Insiders are buying more than the last month. Basic materials look good. Insiders are buying quite in line with the last month. There is a high ratio buy to sell. Insiders are not selling. It is quite good. Consumer staples, yes, another one where you don't want to be in. I mean, not that bad, but really, the buys are 1% of the total bought, the sells are 4%, 136% more than in the last month. So you want to be rather a seller here. Finance, yes, you have a lot of volumes, you have a lot of buys, you have a lot of sells. Both are bigger than the averages. I wouldn't tell you where to go here with finance. Industrial product also is something difficult to understand. Medical, I would say also sell because it's selling more than the last month and buying less than last month, but not that extreme. And utilities, you see, guys, that was very important. This also to know. Utilities had a very big run. I will show you the graphic of utilities because Wall Street invented that they will earn more because of AI. So this is the ETF of utilities. Like, they push it high. Here they started to say that utilities will make more money because of AI. So what Insider did, they said, thank you, goodbye, and they took profits across June. So this is very good to say that you had big volumes. Why? Because Insider knew that was not the reality. So yeah, so utilities and other sectors I wouldn't be in. So what you want to buy is oil, is conglomerates, basically can be consumer discretionary. There are good stocks, things like Nike, like McDonald's, they are getting hammered. And you can see that I think here is important to say that these stocks are probably at good value, but they are not probably going to do anything good in the next month. Why? Because people are not selling. They are saying, this is not the time to sell. I will not sell you my Nike stock at this price. But on the other hand, probably they are saying it's not also a very good time to buy, and something bad is coming with the consumer because they are not buying either. So yeah, so that's a market where you want to be rather in thinking oil, conglomerates, things that were crashed without expecting anything good in the short run, and run away from the hot stocks because this is what the smart money did. Don't forget to like the video, subscribe to the channel, subscribe to the Patreon to see all the details, all the stocks that were bought, that were sold. I think that will help you a lot. Thank you very much, and I wish you